Then, Chandan, what's your take on the entire power theme, given the fact that NTPC for the last 3 days has been among the top gainers on the Nifty? Do you think that now is the time to look at these power stocks, which select power stocks which are making a comeback?
So after the profit booking of almost 5 weeks, Nifty Energy and Power Index is finding some support-based buying. However, the medium-term trend is in pressure, but short-term daily trend is negating its lower top, lower bottom with a small follow-up activities. So with that view, I believe some recovery could be there in the power sector, and NTPC could be the preferred name. Technically, the stock has from the bottom near 298 300 zone and has been making eye top side bottom on the daily scale. It managed to surpass the multiple barrier of 320. So because of that, some recovery could be there. The stock has already seen a profit booking decline from higher levels, so risk reward ratio also favors the trade setup. So with support of 318, NTPC can head towards 340 level. Apart from that, other power name could be in focus. CSE is other name which formed a bullish engulfing pattern on the weekly chart, which has the bullish engulfing and bullish implications. So positive price setup also indicates some uptick. So with support of 132, one can look for an upside target towards 145 in CSC. So NTPC and CSC are two names could be in focus in this segment.
Okay. Can you hear me, sir?
Yeah.
क्या हो गया था? Internet is fine at your end or it is bad at our end?
There's nothing wrong with the internet. It's the connectivity of the gadgets.
It's time for you to upgrade your earpods. I think that is where.
No, AirPods are fine.
Don't say money there, Sandeep. What should one do? Should one take relief from the fact that in last 2 days small and mid cap stocks have stopped falling? Is this a tennis ball which is falling from a rooftop which eventually will fall more after a little bit come back? How should one read into this 2 days of, I'm using the word dinky bounce purposely?
When markets are rising, and there are people who will always say that markets will keep on rising, and when they correct significantly, there are others who will say that they'll keep on falling. Now, what I have been pointing out over the last few days is that we are clearly seeing a trend where the US dollar index seems to be peaking out, and flows into emerging markets imminently will reverse because US dollar longs and US asset concentration has become so huge that it cannot last. So we've already seen many emerging markets actually bounce back significantly. You look at Korea, already up 13-14% for this year itself, 2025. You look at Hang Seng, you look at Brazilian markets, you look at many major emerging markets, they have bounced back. Some have not still. So countries like India, Indonesia, etc., they are still lagging behind. But once the emerging markets start outperforming so much, the flows will start because the flows typically follow performance rather than valuations driving flows. So people think that when things become cheap, then emerging markets start getting money. It's not that. Most of the emerging market funds are trend followers. So we are already seeing what's happening in the Hong Kong Chinese market. Hang Seng is already up 50% last 1 year. So it's been a huge outperformance over the Indian indices. So I think India will also start bouncing back. FII flows overall, in my view, will reverse for most emerging markets going forward. And once that happens, India with a 18-20% allocation will also get its fair share. So I think this is a good opportunity for investors to accumulate stocks wherever they are convinced on the fundamentals and valuations.
Sandeep, so have you reduced your cash levels? Where are you buying? And what outside the comfort of large cap is now in that so-called buying zone where you would say, look, I'm going to chance 5% of my portfolio because this stock and this business, I love the business and the stock is cheap. What is that one name?
Yeah, cash position is now zero. So I think we have invested entirely. And I think where I see very strong value is a set of capital good infra companies like NCC, Ahluwalia Contracts, both of which are our holdings. A company like the VA Tech, which also, despite strong performance, has also corrected in the entire mid-cap corrective move. On the transmission civil construction side, companies like KEC International, Kalpataru Power. Then on the turnaround side, we have added UPL, but that's already bounced back, so we are not buying at these levels, but I think it'll still do well. Then on the consumer side, on the small mid cap, I think I like Jyoti Labs because that's also corrected significantly from the top and now valuation seems compelling. So these are the few names which are coming to mind. And I think NBFCs will also start bouncing back as the liquidity eases off. So I think corporate promoted NBFCs like Mahindra Financial, L&T Finance also look pretty attractive in terms of valuations.
I have never got so many stocks from you. I asked for one and today we've got 6. You're in some mood.
There are many times when you ask, I can't find anything of value because the markets, sometimes last year, second, third, or third, fourth quarter, the valuations were not compelling even for the stock we were holding. So it was very tough to even tell people to buy the stock which you are already holding. You are not selling because you think long term they'll still do well, but I don't want to buy right now because they've gone up so much. But now across the board, we've seen corrective moves and the comment. So many companies have got impacted significantly last quarter and the quarter before that because of what's happened on the government spending, tight liquidity, GDP slowdown. But a lot of these things could reverse going forward.
All right.
Reason why you like NCC and Nagarjuna, NCC and Ahluwalia, because they both ultimately are dependent on the economy. They both are dependent on what states would do, what center would do. They also derive a lot of business from where the private sector capex is likely to move. And given that economy has slowed down, states are going easy, power contracts are going easy, power tenders are going easy, road contracts are not getting awarded. Is it a good time to buy into construction stocks?
Mainly because these companies have got strong order books and their balance sheet is in a good state. And the lot of delays which happened this year on various construction projects, first due to the general elections. It started with the summers being very severe, though that impacted construction, then the central election, then a series of state elections, then somehow the central government departments got frozen, they were not spending, and the government undershot their capex targets for this year. So a lot of those things could potentially reverse next year. And these companies have order books for execution. It's just that the execution slowed down. And the stocks have almost halved from the top. So at these valuations, these are compelling because I don't think that the capex cycle is going to reverse. So there has been a slowdown. So next year could be revival. And then we need to see the pace of revival that will determine where these stocks can go to. So I think it's all a question of what's in the price and what is the potential.
Chandan, I want to go back to this 22,800 22,800 22,800 22,800 5 बार हो चुका है. Kunal feels that it will be broken. If it is broken, what does that mean? 22,800, right? कितनी बार बोल चुके हैं? I think we've said this 22,800 at least 10 times every day, right?
Yes. So 22,800, 22,800 is an important level, and precisely I'll talk about 22,660 because there is 38.2% retracement of the entire movement of the market. But if that is broken, index can correct by 500 to 700 points. So the good part is that we are consolidating. We have to surpass beyond 23,150, 23,333. Otherwise, there will be threat to break this level and correct by further 500 to 700 points. In that scenario, 22,222 will be the key level in the market. So I think if that is broken, be ready for that.
So what happens then, Chandan? I'm assuming that 22,800. I mean, markets are really focusing on that, and we are also focusing on that. If it is broken, it'll lead to immediate panic unwinding, and that could have a rub-off effect on small and mid-cap stocks. Can I assume that template could be at play?
Yeah, so like the good part is that market has been consolidating from last 4-5 days. So somehow base formation is being created in many small cap, mid cap. But if that level is broken, then I think mid cap and small cap can correct by 3 to 5%. Index can correct by 2 to 3%. But again, I have the strong belief in the understanding that if the 22,800 is broken, that panic will be the last panic for this leg of decline in the market. So I believe that breaks, that will be good for the market. Yes, there will be correction, pressure, panic, but I think that panic should be utilized to build the portfolio if you're interested for long term. But if you're for short term, I think you should utilize the corrective move of 500 to 700 points.
Okay. Sandeep, market bottoms are made when there is a panic. It could be news, it could be technicals. Do you think, Sandeep, we've made that panic? I mean, एक घबराहट आती है market में, right? Sandeep, you know it better than anyone else. Like that, you suddenly start saying that, oh my God, my 3 years of hard work is gone. That is called as panic, that घबराहट. Has that happened, Sandeep?
Yeah, it happened, and I think it was reflected in the way small and mid caps melted and fell significantly. Many corrected 40-50%, many fancied ones have corrected 50-60% also. The panic was also reflected in the commentary of some even seasoned fund managers who gave panic-stricken statements on small and mid caps. So I think I would think that it is in, and we cannot be disassociated from the global markets by so much that we keep on falling while others are rising. So eventually, and this kind of phenomena, Nikunj, you have been there for so long. This kind of divergence of the Indian markets vis-a-vis other emerging markets is very, very rare. And I have not seen it. I don't remember when I saw it last. So I don't think it's going to last unless and until the call is that the entire emerging market move will again reverse and all emerging markets will again crash, which does not reflect from trends on bond yields as well as what's happening on the US dollar index.
Tesla, everyone's talking about it. And I don't know whether Tesla is coming to India or not, but the deck in a sense is getting cleared. The second contra point I just want to bring out here is then, and you know, Sandeep, please jump in if you agree or if you disagree. Sandeep, I get a feeling that this entire hullabaloo which is happening, that tariffs are coming on pharma, I think is unnecessary. If tariffs come on Indian pharma, Sandeep, Indian pharma companies will pass on the price. If they pass on the price, US healthcare cost will go higher. If US healthcare cost is higher, it will hurt America more than India. So my sense is tariffs and pharma is not coming. One should buy into pharma stocks in the run up to the tariff. What do you think, Sandeep?
Yeah, pharma in any case is defensive. So pharma demand cannot be replaced, and new pharma capacities to be set up, get approved from the FDA, etc., is itself is a at least 3 to 5 year move. So I don't think the replacement can also happen so fast. So tariffs and custom duties, like in India, are effectively a tax on your own citizens. You look at what happened to edible oils prices when custom duties were increased. The domestic producers ostensibly, the prices just shot up. So effectively, the domestic consumers bear the brunt of tariffs and customs in the short run, at least, and that's the fact.
All right, Sandeep, with this, we'll let you go on that. Really appreciate you taking the time out and speaking with us this morning, and also giving us the ideas that you're working with in this market. But with this, viewers, let's also address let's also get some of the ideas, stock-specific ideas from our experts then. And Chandan, you go first. Give us the stocks that you are tracking this morning.
Yeah, so first it will be buy on Shriram Finance. The stock has given a breakout from its falling channel on the daily and the weekly scale, surpass its falling supply trend line. Support-based buying is clearly visible with some open interest activity. So one can buy with support of 565 for an upside target towards 610. Second trading idea, there is buy on SRF. Selective chemical counter started to witness buying interest. We have seen good recovery in the UPL, and now SRF has started to witness buying interest after a corrective and consolidative move of last 12 days. Negating its lower top, lower bottom, formed a strong candle, taken support at the previous hurdle zone. So role reversal are clearly visible for the next leg of rally. One can buy with support of 27.25, and SRF can head towards 29.35, 29.50 zone.
All right, those are the two calls coming in from Chandan. SRF as well as Shriram Finance, two of the strong candidates that he's tracking. But Kunal, what about you?
I'll go with the buy on Som Distilleries, a stock which I think recently has managed to give a very strong breakout, and especially with the break coming above its 200 DMA yesterday on the back of much higher volumes. So expecting a follow through up move, 128 as a target, stop us at 111.
All right, so those are the mid-cap ideas coming in from our experts, but let's